Mohamed, always great to catch up with you, sir. Let's just begin with the importance of liquidity. Talk to me about the liquidity trade and how that's underpinned so much of the action we've seen throughout the year so far.
Good morning, John. Liquidity has been critical. We entered the year hoping that policies and global reflation would take us higher on risk assets. Policies have generally disappointed due to what's happening on the political side, and the global reflation is not as strong as hoped for. It's there, but not as strong. So ultimately, it has been again about liquidity, and liquidity has meant not just that stock investors have done really great, but even diversified investment having given too much up by being invested in bonds. So liquidity continues to be the main driver of markets around the world.
Mohamed, you outlay kind of 6 different points, and point 3 is something I want to pick up on. Big picture, market drivers have changed, but the critical sustainability handoff has remained elusive. Talk to me about what you mean by that and how critical it is.
So liquidity can take you higher for a while, but you need continuous influx of liquidity, and that's hard to achieve, especially if central banks have been the main determinant of liquidity injections. What investors need over the long term to make their gains sustainable is validation. And where does that validation come from? Economic and corporate fundamentals. So look for how economic and corporate fundamentals are doing, and unless we get the policy response on pro-growth measures, that's going to be hard to achieve. So focus on fundamentals. Ultimately, that's what validates asset prices, not liquidity.